What's up, everybody? JC Peretz here, founder of All Star Charts, and I'm here with my man Steve Strazza, talking hot corner. It was pretty hot last week, huh?
It's been really hot out here. Yeah.
Listen, if you did not catch our live stream event on Thursday, where we were talking about all the ins and outs of all the SEC filings, how we compile them, why we do it that way, and then how we profit from it, right? You know, how do we actually make money in all this? That's the end goal, right? We start with the end goal, make money, and then reverse engineer how we get there. And Spencer Israel, Strazza, Spencer Israel, giving us quite the compliment, telling us that this was the best explanation that he's ever heard. And he talks to us quite often, and we've kind of talked about it plenty with him in the past, but he had never seen it quite put this way. Are you impressed by Spencer's big shout out there?
It feels good. I think it's about time. I think with, how deep we've been into this data for so many years now, we could teach a master's class on it. So I'm glad that the feedback has been pretty positive.
So a few things that get Strazza and I very excited about this particular group of stocks. Number one, most people do it wrong. The truth is, the only reason this was built was because it didn't already exist. We thought we were ignorant, we were dumb. We thought that we could just subscribe to something and get the data and we were good, right? We did it. We literally did believe that.
Our original plan was to just pay for the data like we do with other things. And we did, right? We tried. We paid for a lot of data early on, remember? And it took a big, kind of process of elimination for us to be like, all right, let's just do this ourselves.
Yeah, and it was a pain in the neck too. So it's not like this wasn't something we wanted to do. This was something we had to do because it didn't already exist, right? There are hundreds of filings every single day with the SEC. Which ones matter? Which ones don't? You need an area of expertise like Steve Strazza, who is literally on the auditing side of these filings and working for the hedge funds, helping them with these filings. Having someone who knows the ins and outs of all of this, because I am not that person, just to be clear. I'm more of like, okay, line go up, intrinsic value somewhere in there. Somebody knows something about this that I don't. Right. These are hedge fund managers. These are CEOs, CFOs, corporate executives at the company who know more about that company than anybody else. And then as Strazza has, explained so eloquently, which ones of these filings matter and which ones don't. So if you missed Thursday's big event, Spencer,
yes.
Where can they find it? If they missed it on Thursday, where can they find that?
I will drop the link for this is Voice of God, everyone. I will drop the link in the chat literally right now.
The John Facenda of technical analysis, ladies and gentlemen. Thank you, Spencer Israel. Great event Thursday. Now here's what happened. We went too far, right? We went too long. We had so much to say. We had so much value we thought that we were bringing to the community. We didn't have enough time to answer any questions. So that was, right, good and bad. But we made up for it by being here today. You guys submitting in your questions. Keep them coming. I know we've already got some. Spencer, should we get right into it? What's going on? How can we help?
You guys were so into it that we forgot to go to the chat for questions, and then we ran out of time. So if I wrote them all down though. Don't worry, we got them all down.
Shit happens, Spencer.
Yeah, it's okay.
We're very excited. You're very excited.
Okay.
The two of us, we can talk alone. You put us together. I mean, we could have talked about it all night.
I know. So, okay. So if you have a question for right now, drop in the chat, but we have a few that we want to get you from last week. So
shoot.
I apologize. I didn't write down who asked what, but I have the questions nonetheless. So here we go. Do you track specific representatives based on past performance? And then a follow-up is, do you have favorites? And I will interpret the second part of that question to be referring to all insiders and not just Congress. But first off, do you track specific representatives, and then do you have favorite insiders at all?
You want to take it, JC, or you want me to start?
Well, I want to just make something very clear, because regardless of what we're about to say, and we all have our biases and we all have like our favorites because for whatever reason, but let's just keep something in mind. Despite all of that, it all comes down to, are we buying a stock that we think goes higher, regardless of whether that senator was buying it or not, regardless of whether that hedge fund was filing the 13D or not? We are buying these things because we want to buy them. Now, there's additional motivation in doing so because somebody who knows information that we don't have is using that information that they have that we don't to buy a lot of shares. So they believe that they're going to be able to make money with the information that they have. We don't know what that information is, but we know what they're doing with it. So there's an inherent built-in catalyst that I am unaware of that I'm perfectly happy about, considering I would own this anyway. So there's an additional monster catalyst, and we've seen this time and time again. So whatever Straz is about to say and whatever I'm about to say, I want to caveat with that it's price first. But we have our biases. The Baker Bros, when they're buying biotechs, like, how do we, obviously I'm paying attention. They're the best in the business. Straz has taught me that one. Straz really, I'll let you get into it, but Straz likes it when the CFO is buying versus the CEO. The CFO, no, right?
Listen, the fact that an insider bought something, or a specific insider that might be one of our favorites bought something, is always going to be far, far, far less important than the basic principles of trend following that we're overlaying on top of all this data, right? 100%. And that's really the beauty of this whole process. Now, when it comes to representatives, let's just start with the politicians. I think that's our weakest form of insiders. Let's remember, these people are experts in public policy. They're not experts in capital markets. We do have insiders who are experts, some operational experts, and others capital markets experts, right? The hedge funds and institutions. That's not your Congress people. So I try not to play favorites. Do we have track records for these guys? Do we know how well they do? Absolutely. Do I think maybe one's going to get lucky this year and another one's going to get lucky next year? And there's probably no rhyme or reason.
Also some are more active than others. And we know that because we follow this every day. So, like Tommy Tuberville was buying Adobe or whatever this week. Like, that's not surprising. He was like YOLOing lumber futures last year. Like, he just trades a lot, right?
We get to know the character of these insiders. One thing that I'll give an example of something that does stand out from the political filings. If there's a senator from Texas who oversees the Houston district and he's buying some small cap oil and gas stock that's based in Houston, we notice that. We know that. If there's a California representative who's going hard into some new tech startup, we're noticing that. If there's somebody like Chuck Schumer from New York, who I know knows all of the hedge funds and big institutions in New York City, if he's buying a financial stock, we're noticing that. We might weigh it a little bit more. So I would say
also the size, like this one, look at this chart of Uber. This was the CEO of Uber buying $5 million worth of stock. This thing was getting slaughtered. CEO stepping in. He's got a ton of stock exposure as it is, his salary. Like, he's got enough exposure to Uber, yet he feels the need to go out of his way and buy $5 million more.
Well, this is different.
Yeah, I'm going to pay attention to that.
Well, now we're talking about Form 4 insiders, where we do 100% have favorites. JC's calling out Dara Khosrowshahi from Uber here, buying stock at the bottom, buying a lot of stock at the bottom. We want to see a CEO, a founder CEO, an operator, a CFO, I would argue at times is even better information.
When Jamie Dimon was buying JP Morgan, literally the day that JP Morgan bottomed, like, these things really stand out. So it's not just the characters, but the type of characters. This is CEO JP Morgan buying stock, literally that the whole market bottomed that day, right? So, I mean, you see these sorts of things. Michael Dell buying at the lows, CEO of the CFO of Adobe, right? Like, just buying lows. Like, yeah, that really, really stands out, as opposed to, sort of the convoluted mess of, 3 directors all buying 30, 50 grand worth of stock just to save face. Like, if anything, that's a bad thing, right?
Well, listen, we can go right on down the line and talk about like specific examples. You're right. When we get the 4 or 5 directors all coming out after a board meeting and buying $15,000, $20,000 worth of stock at the same time, that's not something we pay attention to. We know that is just kind of a trick and something that you see too often. When somebody who is an actual officer of the company is coming out buying in size, as the stock is collapsing on earnings, that stands out. When we see a Form 4 corporate insider buying, and then also a political filing, and then an institution building a brand new stake on top of it, right? We're considering that and weighing all that information together. So it's on a case-by-case basis, but the simple answer is yes, like, we do have favorites. And I just want to talk about the 13s quickly. We have favorites in the institutional world as well. A lot of people on the interweb do this really wrong because they want to drop headlines about what Paul Tudor Jones or Stephen Cohen is buying. Who doesn't want to know what Paul Tudor Jones is buying, right, JC? I don't give
I
a
certainly
damn
do, but he won't tell me.
I don't give a damn what he's buying, because guess what? By the time he files and lets us know, he's out. Okay.
Right. But I want to know what he's buying now, but those filings don't tell you that.
That's right. He's not going to file Form 13Gs or Form 13Ds. These long short traders, they actually they try very hard to skirt those filings and never go over 5% or never trigger a threshold. When we see them, we kind of know, oops, somebody made a mistake there. On the other hand, there's Baker Bros, there's Bill Ackman, there's Carl Icahn, there's Warren Buffett. There's guys that we know they build positions and they're going to be there for years.
Nelson Peltz, right?
All
These
big
are
value guys.
old school activists. They invented the game. But hold on, I think there's an important Spencer. What was the question about entering? Somebody asked a question about like, okay, this is great, but when do we enter? What was the question?
We're usually going to enter a lot later than these institutions, is the truth.
Yeah.
Yeah, well, the question was basically, how do you know when to enter? I mean, there was a few questions related to this, but that was the gist of it. It was like they get in, and then what does that mean, that you get in, or no, or
wait for the chart?
Rarely. Sometimes, but that's not really the point. It's more of like, okay, stock gets lit up, it's on the board, right? Now there's something happening there that we don't know, but we know is very positive for a very informed individual or group of individuals. Then we could be in one of two scenarios, right? We are either seeing strength in these names, which is rare, but we'll see strength in these names where we can participate early on. But usually what we're doing is we're waiting for a primary trend reversal where, you know, if the CEO of the bank thinks that right now is the best time for him to buy, he's going to be in that for years. We want the market to also start to agree with them and start pricing in some of the things that this particular CEO saw coming. So that primary trend reversal is probably the easiest way to think about it. And rarely has that reversal already taken place. It'll obviously fit that criteria if that were the case, but generally we are waiting for that reversal. And as soon as it's triggered, then we can enter if we believe that both the risk is in our favor and well-defined, and the reward, if we're right, and the insider's also right, that reward is exponentially greater than the risk that we are taking. So in other words, the way I like to look at it, for every dollar that we are risking in the trade, I want to be able to make at least $7 or $10, right? That's how I look at it. That's, you know, some people will tell you 5 to 1, 6 to 1. Some people will tell you 10 to 1, 12 to 1, 3 to 1. Everybody has a different number. 7 for me seems to be that sweet spot, you know, that I think fits for me. But, you know, 5 to 1, 4 to 1, you know, all of those make sense depending on your specific objectives, your time horizon, right? Your risk parameters that are going to be different than all of us. You know, Straza would most likely participate using an option strategy. So it's going to be a different way to express a bullish thesis on a stock, right? Sean might put on a bull call spread or maybe a risk reversal. So the three of us will all agree that we like the stock, and we'll go ahead and express it in 3 completely different ways, right? So for the purposes of Hot Corner Insider, and we're going to talk about this on Thursday. So this coming Thursday, 11 o'clock, all premium members of Hot Corner Insider, I'm very excited about this. This is exactly what we're going to talk about. We're going to talk about, and Straz is going to go step by step with why this particular situation stands out right here, right now. And also touch on the ones that we've been talking about over the last 6 to 12 months that are still in play today, because these underlying catalysts can persist, right, Stress?
Yeah, I'll just add, well said. I'll just add that really in its simplest form, all we're doing is we're waiting for the chart to confirm the bullish insider activity. Right? It's just like anything else we do, right? We're always looking for confirmation of this data point. We need confirmation of the insider data, period. Once the trend confirms it, we're in. And a 7 to 1 reward to risk ratio is actually not that uncommon, because we're going to be buying fresh trend reversals, right? Breakouts from fresh bases. So what will often happen, I would say 9 out of 10 times on this list, is the insider or the institution buys during a downtrend, right? Or some period of sideways, some trendless period of basing, right? Where the stock is trying to bottom and reverse. We skip all of that opportunity cost that comes with the trendlessness and the basing, and we only enter once we have conviction and confidence that the trend has reversed higher, right? So they'll typically buy earlier than us and get in $5, $10 lower than us. We'll wait for that trend confirmation, miss the opportunity cost that comes in the middle, and then just enjoy the ride higher. That's the idea here.
Okay, a few more questions and also a couple from the chat. This was a great one that we should have addressed last week and we didn't. But where's the question? I just lost it. Oh yeah, do you guys track when they sell? So we talk a lot about when the insiders buy. Do you also track when they sell?
We're aware of it. We're seeing all the filings every day. So it's not that we're not aware of it. We're probably not going to tell you about it, because what we do on this list and with this data is we save you from all that noise, right? So if I came out and told you every time there was a Form 4S, it would destroy all the good information that we're delivering you every day.
Yeah, so there's a lot of different reasons why an insider might want to sell.
Yeah.
Pay for a daughter's wedding, college tuition, basic diversification because they already own a lot of stock. Their
Divorce.
Compensation is tied to it. Like, just they have a million reasons to sell. It doesn't mean that they think the stock is going to go down, right? Quite the opposite. They still work there. They still own a lot, right? Doesn't mean they think it's going to go down. But there's only one reason why they would actually buy, right? And buy when they don't have to, right? So these are not planned purchases. These are not exercising options. None of that stuff. These are open market transactions, and there's a specific filing in that Form 4, a specific letter, right? The letter P, like in this little box. Like it's a very unique type of purchase that if an insider is doing that at a large scale when they don't have to, and for diversification purposes probably shouldn't, yet they still feel the need to do that.
Yep.
Like, yeah, that's a big deal. So that's the difference between buys and sells. The buys, specifically the types of purchases that we are looking for.
That's right.
We're not interested in all that other stuff, all these planned stuff and exercising. We don't care about any of that. We want specific open market purchases.
So,
and the cells just don't give us that information. Now, once in a blue moon, is there, good intel when there's just boatloads of selling coming from the corporate execs that, might stand out? Sure. But it's so rare, it's not even worth talking about. The real money's made in the purchases, in my experience.
And JC, in those cases, we've had some good examples just the past few years. It's all over the news and everybody knows about it. We don't really have to report on it. So are we aware if Jeff Bezos just got divorced and he's pouring out stock on the open market because he has to? Yeah, because that's going to put pressure on the stock, and we probably don't want to enter it from a short-term perspective. But does that tell us anything about Jeff Bezos and how he feels about Amazon's future? Not at all. Elon Musk, he had to buy Twitter. He needed money, right? So he's dumping shares on the open market. It puts pressure on Tesla stock. It doesn't tell us that Elon Musk likes Tesla any less. Are you kidding me? Could this guy be any less diversified, right? He could sell most of his Tesla stock. If I were him, he's a crazy person though. So I think with the buys, it's by design. What you said, somebody could be sitting here listening to this and be like, no. There's plenty of reasons why an executive might file a Form 4, right? We're not tracking those. The Form 4s that we're tracking that make it on our list, we know there's one reason. They're not exercising options, right? They're not transferring stock to a different account or a trust or something like that, right? It's not a grant. It's not a planned purchase. They came out because they had the idea that if they bought shares here at this price today, that they could make money by selling them at a higher price in the future. That's it. There's one reason. So we are very careful to make sure that the transactions that come onto our list fit or fall into that category.
All right, a couple more questions here. Actually, there's some good ones from the chat. Jonathan, do you watch for a short squeeze or high days to cover within the context of an insider purchase?
In a best case scenario, hell yeah. I wish that was more common.
We can't help ourselves, right? We're doing a lot of different things. So if we see a name come across, I was telling JC about one this morning. We talked about it on the morning show today. I'm like, this thing has a 45% short interest. So we would be remiss to ignore the supporting data or information that we have about these stocks. So of course,
it's like a catalyst enhancer. So not only does this insider think it's going to go higher with information that this insider has that we do not, but then also 45% of the float is short. So you got like a double catalyst. Like, hell yeah, now we're talking. Yeah. So yes, to answer the question, in a perfect world, yes, but how often are you having surf and turf, right? You can't have a ribeye and clams with a lobster tail. Like, that doesn't come around that often, right?
So you're right. We have two good examples of this. You want to talk about them real quick?
Yeah.
Like throw 46, Izzy. So Carvana, you might be like, why the hell did you guys buy this thing? You're technicians, right? We had a level when you zoomed out on this chart. We had the pandemic lows there. Like, we were picking our spots, but it's really because the stock had like a 70% short interest with just some wildly bullish insider buying, right? So we define our risk. We have our level. Why not take a shot? The rest is history. Show the next chart.
Yeah.
But that was
a good combination of stuff.
This was short interest data also that really had us thinking, oh wow, this could be a big one, and it was.
Yep. So now you're adding an element of an unknown catalyst that these insiders were aware of that we obviously were not. And in addition, the market mechanics doing their thing where you have a super high short interest being able to drive that higher. So, yes, like I said, I wish it happened more often.
Okay, a couple more real quick, and then we'll hop. Ned Grace in the chat. How do you interpret the whale PROK buy reported today? Croc buy.
Go watch the morning show. We like it.
Yeah, go watch the morning show. We talked about it today.
We like it a lot.
Strauss is near and dear. Yeah, no question. Big transaction.
Huge. Yep. It's a big one. Yeah.
And that's another thing, we talked about, do you have preferences? Like, I like to see big checks, when a CEO is buying $30,000, $50,000 worth of stock. It's like, yeah, 100 grand worth of stock. Yeah, that's all you got. $5 million. Now we're talking. We have a special list for this, right? So this one, we see that massive, whatever it was, 50 million.
We know there's a juicy short interest too. We throw it onto the screaming hot list. We see that trend starting to reverse. Like we'll be talking about this one for sure in the future.
There's certain names that come onto the hot corner that, are really, really interesting purchases that are being made out there. And then there's the screaming hot list that it's like, oh my God, are you seeing how much these people are buying? Like, wow.
So the answer to the question is yes, spot on. That was a special one. It's going on to a special list.
And then Aubrey wants to know, will some of these screaming hot corner names filter through to All-Star options? Probably, I would think.
Sean can't help himself.
Yeah.
It depends, because keep in mind that some of these, the majority of them make the liquidity, because remember, there needs to be enough there needs to be liquidity in the options market for Sean to be interested. So that's really the
and there's not with ProKidney, because I already checked.
Right. So some of these names, like some of these biotechs, just don't have liquid options markets. Some of these other names with super high short interest might not make it either. So just something to keep in mind.
All right. Let's do one more and then we'll hop from one hole. So let's look at like Oxy and Berkshire, right? We've talked about that a lot. How do you know when to cut in the sense of efficiency of capital? Oxy basically went sideways for months and months and is selling off as of late. So really talking about following Berkshire Hathaway into Oxy or not, I suppose, in light of their 24 purchases of the stock in the last couple of years.
JC, you want to take it?
Listen, it's a trendless market
in
a very low volatility environment where Berkshire Hathaway is accumulating shares. So these are one of those things where it gets down to your time horizon. I think that a breakout here for me would be incredibly constructive. I think there's a built-in potential catalyst to send it higher because Uncle Warren knows something that I certainly don't. I know less than nothing about Occidental Petroleum, but I guarantee you that Warren Buffett has done at least a little bit of homework, and his team has as well. And the fact that I trust that there's something there. Now, if we get a breakout in Oxy, I'm going to be more encouraged and I'm going to be more confident with that position than I normally wouldn't had Warren Buffett not been in there. Also, I would argue Occidental Petroleum is higher on my list of interests because of that, right? Yeah. But it still ultimately comes down with the first thing that I said today, which was despite whatever's happening, whoever's buying what, it comes down to price. And it comes down to being in a position where it makes sense from a risk versus reward perspective, and time being part of that, because opportunity cost is a risk also.
Yeah. I don't think we have the Oxy chart handy, but throw up slide 53. So here's the truth about Oxy in my mind. this is where the bonus options trades come in, right? Because Buffett and Berkshire bought that thing up into a multi-year range and then became the lower bounds of that range. And unfortunately, a long-only common stock strategy doesn't lend itself well to trading a range. However, we did have conviction every time Warren came out and defended this $60 zone, right, that it wasn't going to break. So it was perfect for selling puts. And Sean did that with the options product time and time and time again last year. And it was frustrating for us just trying to trade a range, right? And trying to get long against 60 and never having a target hit. In the future, we're going to do so much better to bring the bonus options trades when they make so much sense. And that Oxy example to me, JC, is like the perfect situation for it.
Yeah, I mean, listen, it's a function of the environment for energy stocks in general. Oxy essentially moves, Oxy's a big one. Warren Buffett also owns a lot of Chevron also. So like that's where his exposure is. So it's also a good, for me, what is this all about? By the way, guys, Thursday, 11 o'clock, we're going to talk about, it's every week, Straza runs this video. I'm going to join on Thursday to add some color on momentum and the primary trend reversal and kind of chime in, where I think I can add some value to the conversation. But this is going to be for premium members of Hot Corner Insider only. This is Thursday at 11, guys. So we wanted to make sure to answer everybody's questions. But what it really comes down to is idea flow. And the reason that we did this in the first place was to get a unique data set of ideas that were not coming from other areas, particularly our more top-down approach to the market, right? Where we start with the overall indexes and, look at different sectors and industry groups and ultimately the stocks themselves. That deductive approach, that top-down method that All-Star Charts was always known for, is great. And we're really proud of that. But to be able to supplement that with a steady stream of ideas that are long-only ideas that people who have better information than we do, they're taking that information and doing certain things. To be notified of those certain things and those stocks is incredibly valuable to me as both a trader and an investor, because this is a multiple time frame situation. It certainly is for the insiders. Why shouldn't it be for us, right? Warren Buffett is not day trading Occidental Petroleum. He's been accumulating a monster position in this thing because he thinks it's going to go substantially higher. There are different time frames at play here, and they are suited to who we are specifically and what we're trying to do. So I know if you want to throw up the checkout here so everybody could see, if for annual members of Hot Corner Insider, you are getting access to Rangefinder, which is going to organize all of these trades for you based on your specific parameters, allow you to filter based on sectors, based on proximity to best entry points, based on best risk versus reward. So, a lot of investors, myself included, wake up on Monday morning or are thinking about it over the weekend or, are essentially coming to work. And it's like, where do I start, right? Where do I begin the process of finding a place to allocate capital, right? Which is a question that we find ourselves asking every single day, right? I want idea flow. And this is that. And Rangefinder does a great job of organizing that custom to what you are looking for specifically, which might be different than what I'm looking for, or Steve, or Spencer, right? Or my grandmother.
Yes. Also, JC, it's an uncorrelated data set to a lot of the other things that we do. So it complements it so well, similar to the short interest data or the dividend data that we use, like it's completely uncorrelated from any of the technical stuff we're doing. So it does bring us like a different perspective, which is lovely. Also, if I could just say before we hop off here, guys, I'm not kidding. My favorite thing that I do each week at All Star Charts is this Wednesday video. We have such a great time. It is fully interactive. I'm engaged with the chat. We're answering questions. We're throwing it back and forth. We're talking about the names on the list. We're talking about the new insider filings and the big developments of the past week. And I think it's really one of the best things I get to do, talking to you guys and also just kind of slowing things down and walking through the markets just on a weekly basis. It's really awesome. So I hope to see you all there.
It's nice. It adds confidence going into the marketplace, knowing that Straza knows the ins and outs of these things. Even when there's something fishy about a filing, Straza will call it out. It'd be like, that was actually wrong. They're gonna edit that in a day or two, and someone's getting yelled at in the compliance department, right?
That happened today. Yeah.
That happened today.
It happened. Listen, well, what people think is that this is like such like a smoothly run machine. This is not that at all. It's people accidentally hitting a button, filing the wrong thing in the wrong place. Like happens all the time. There's no watchdog like watching over these things and being like, oh, this is wrong. Literally none of that. We had a political filing that was 9 months late the other day. I wanted to see like what would happen. He gets fined $200. Like it's really, we're doing our best out here with this data set, but it's very imperfect. And we understand that and we know what to do with those imperfections.
Yeah. Also, that might piss you off that they're so sloppy. Well, welcome to our club. We wish they were better at it. We wish we made it. We wish they made them file it faster. All of those things. And by the way, they've gotten better, but to be fair, it couldn't have gotten any worse. We're taking data that we know is incomplete and potentially inconsistent, but we're taking the best filings, the most important filings, and that's what really matters, right? All these other filings that don't matter, as silly as it is that this guy screwed it up, or the other guy fat fingered Apple, so he had to immediately sell it, but then it caused the filing because there was a transaction, like all that stupid stuff. Like it's fun to laugh about or cry about because that's our federal government. But at the end of the day, there's money to be extracted from this. You might not like that senators and representatives are trading on a regular basis, but they are. You might not like that the corporate insiders can use that information to profit, but they do. And you might not like that these hedge fund managers have more money than God and can spend a hell of a lot more on research and development than any of us. And you might not like that. But that's just the way it is, and they're going to profit from that, and we could follow those footsteps, and that's what we're here to do, guys. So the Hot Corner Insider, guys, Thursday 11 o'clock is our next event. We do that every single week for premium members every single morning. It's the easiest, fastest to digest email of them all. It takes 1 minute to digest the Hot Corner. It's usually 3 names, 5 names, 7 names. These are the most important filings from the day before. Of course, trade alerts once the primary trend reversal is in, and we know we definitely want to be long with Tommy Tuberville or Nancy Pelosi or the CEO of Adobe or whatever. That at the end of the day, that's what it comes down to, is price. Of course, the weekly video, Straz's favorite. He gets to talk about whatever he thinks is most important and answer questions. And then, of course, the new Screaming Hot Corner, when there's just a filing that is just so extraordinary. And the time to buy is now, not at some point in the future. The Screaming Hot Corner, I think, is pretty awesome. And then, of course, we're going to put out bonus reports every single month, at least, when special situations really come up, right? And I wish I could tell you we knew when these special situations were going to come or when they were going to come. You know it when you see it. So we don't want to make any promises as to, how frequently these come out, but, and sometimes they'll come out in bunches where there'll be 2 or 3 in a very short period of time. And then a month will go by, right? I mean, that's really just what it is. And then, by the way, the last thing I want to mention, Straza, and I'll let you chime in. Somebody asked about options. Yeah. Sometimes there are great options trades that come from these ideas, right? So once the alert comes off, 1 out of 5 trades, let's just call it, right, 20% of trades can be better executed through options. So that will be a nice little bonus to be able to bring out.
We'll trickle in some option setups for sure. And
it happens. It does happen.
I think
you can't fight that.
No, it's good. I think the Screaming Hot feature too is really awesome. I'm glad that we're doing this because not all of these insider buys are created equal and not all these trends are created equal, right? So when we really like one and that happens, we're going to make it super clear. When we really have conviction, we really, really like an insider buy and the trend reversal that's coming with it, it's going to be clear as day.
All right,
Spencer, what are we missing? We miss anything?
Yeah. No, that's it. Just use the links in the chat and description if you missed Thursday's video or if you want to get access to this Thursday's video, or just get On Corner every single day. All the links are in there.
Thanks,
awesome.
Everybody.
Thank you, guys. Adios. See you on the interwebs. YOLO responsibly.